Well, for investors and traders, you always have choices about what to hold, when to buy and sell assets. So what should you consider when it comes to opportunity costs? Mies Schneider is with us, Director, Trading Education and Research at MarketGauge.com. Mies, nice to have you on the show. How about investors? What do investors need to consider when it comes to opportunity costs?
Well, let's step back a little bit first and give a definition of opportunity costs. So basically, it's when you choose one instrument over another and you forego the potential benefit of the one that you didn't choose. And in business, of course, that's much easier to do because if you're going to make business decisions, you can actually weigh every option at the cost and the benefit and come up with some relative decision about what you're willing to forego because you think the reward's going to be better. In trading, it's a little bit more interesting because we have so many choices we can make. So basically, here's what we like to do for our opportunity costs. Since Tesla's on everybody's lips today, this is a perfect example. Last week, when Biden made the announcement about electric cars and that they were going to really focus on electric cars as the part of the infrastructure plan, he brought attention to the space. It was a space that was beat up. So now you had an opportunity to look at all of the different stocks within that sector and decide which instrument would give you the best benefit. And Tesla clearly would be the winner in that for many reasons. So number one is when you're making a choice in a stock, you want to consider your time frame. Am I going to do it as an active trade? Am I going to buy and hold? You want to look left basically to see what support and resistance has been historically to try to make some kind of a speculation on where you think that particular instrument can go. And you want to look at the liquidity, the volume, the open interest, and make that decision. So if you would have bought Ford, that would have been one benefit, but buying Tesla for a sustained rally is probably the better one. And that's how it goes in trading all the time. You're always thinking about that. The big difference between, let's say, a standard business and doing it in trading is that you can really diversify your portfolio so you can take advantage of a lot of different opportunity costs by having different instruments either heavily weighted in a sector if you think it's really good or spreading it out among different sectors and trying to pick what you think is the best opportunity there.
Yeah, so could you simplify it? Because someone may say, how important is opportunity cost when you're making this decision? What to buy, what to sell in your portfolio? I mean, just to simplify it, you got to bite the bullet one way or the other, right?
Yes, and I think that when you're looking at the market that so actively rotates, so let's use another example to simplify, looking at growth names and big tech. For a long time, if you were buying Amazon or Microsoft, you were making no money. There was really no benefit to that opportunity. Whereas if you were buying some of the new Fandango stocks, like let's say Palantir and Fastly, and I'm talking back during the pandemic, the opportunity was much greater, and that has shifted. So I think when you're looking at opportunity costs, you really have to weigh a few factors within that sector. And which stock do you think, based on where it's been most recently, to where you think it's going to go. And that's really good old-fashioned chart reading, I have to say, is your best, I think for me, the best way to really determine the opportunity cost. How close am I to support? What's my risk? And then how much do I think I can make in terms of reward? Can I make 2-to-1, 3-to-1 versus my risk? And that's how we're always looking at it as trader. Our opportunity cost is really trying to pick the hottest stock within a sector, in a sector that's hot versus the macro, so that we don't get caught up in buying something, then all of a sudden we're not looking at the signs of the overall market's about to crash. Does that simplify?
I think you make a great point.
Okay.
Yeah, you talk about sectors and trends, and those make a difference. Also, you talk about diversification, and that too is important. So the final thought here as you reassess your portfolio is looking at all these things, but you have to also rebalance the portfolio often and just make these decisions, right, using diversification or trends.
Oh, absolutely, especially when volatility really starts to pick up. I know that you were just discussing cryptocurrencies, a classic example. If you are not prepared for some kind of a risk-reward situation where you're going to take profits on the way up, and if you get out of that position, not married to it, you don't want to really get too focused on one particular option. And that's where the opportunity costs are great if you really stay fluid in terms of not only sectors, but the volatility, the macro, and of course, to me, I can't ever stress this enough, the risk versus the reward.
And you see a lot of people really leaning towards financials or, different things like cyclicals or, it's hard to know at which point. Are you feeling more bullish, bearish, or somewhere in the middle right now pertaining to the market?
Well, I'm more bullish than I was, say, Friday, but I still want to see, right? I mean, easy to say after
That's
the fact.
convincing. That's convincing, I get what you're saying, though. I do. I get it.
Well, there's there's a good reason to call, and that is because I really am a big fan of seeing the small cap stocks participate in the rally. And right now, the Russell 2000 they're participating, but more like coming and dragging and screaming as opposed to leading. And yes, everybody gets super excited at growth stocks and big tech stocks, but U.S. economy is really more based on those manufacturing, industrials, retail, transportation. That's what gets me excited about becoming very bullish.
Mies Schneider, always great to have you on the show. Thank you so very much. Mies Schneider,
Nice to see you.
Director, Trading Education and Research.